Guys, I have scary news. Apple has become the most shorted stock in the stock market. I was absolutely shocked to see this. Apple has $16.3 billion worth of short positions against it. Now, what does this mean? Why is this telling? What this basically means is that people are betting for Apple to come down, and they are going to make money on the way down. Now, why is that scary? Because Apple is the shining pebble, shining rock, shining whatever you want on the hill. And people say, as long as Apple is good, the market is good. As long as Apple's good, the economy is good, because everybody goes and buys these Apple products. And this is arguably the best company in the entire world. Paul, his friend Michael Moskal, my friend Michael Moskal, have often said that Apple is going to be the last stock to go. When people start giving up on a great company like this, then that is when the stock market is going to fall. I've taken that a little bit further. I think it's going to be Tesla, outflows of ARK, and Apple. And we're starting to see those outflows of ARK. Tesla, haven't looked into it yet, but now when I start seeing something like this with Apple, that is absolutely incredible, especially right after their iPhone 14 drop, their Apple Watch drop, their iOS 16 drop, their new AirPods drop, all of this accumulation of new products that are coming out, which are absolutely crushing it, by the way. Their pre-orders for the iPhone 14 are out of control right now. So I went in last Friday and I bought the new iPhone 14 Pro Max. It was a $1,200 phone. Within 13 minutes, that delivery date went from this Friday into October. That's how fast people were buying the $1,200 phone. Now, the cheaper phone, that one is still getting pushed back. That is cheaper. It's $800 phone, and that one's being pushed back. Now, the interesting thing is, Apple did not raise prices on these phones from the iPhone 13s. And you can see here, when we start looking at this, US delivery times for, where were we? The iPhone 14 Pro and Pro Max have been stretched to 29 to 36 days, which is crazy. That means that if you were supposed to get your phone on September 15th, 16th, well, you're not anymore. You're going to be getting it sometime in mid-October, towards the end of October. The same thing is happening with the AirPods. The same thing is happening with the Apple Watches. So what we're going to do in this video is I'm going to go through and look at some value of this. And we're going to just check out the 8 pillars real quick. We're going to run Stock Analyzer. We're going to look at some options. So if you don't own Apple and you want to, I'm going to show you how you can do that very efficiently and collect money on the way. And of course, I'm going to hit some trading at the end. So let me pull up the 8 pillars right here with Apple. We're also going to run through some analyst estimates. Just looking at these 8 pillars, these are 2 red X's that we like to see, because what does this tell us? Our 5-year PE is high. Our 5-year price to free cash flow is high. Everything else is sitting in a very, very good range. Everything is going well for Apple. So these 2 things just tell me one thing. The company is overvalued. At the current price of $155.20, we have some overvaluation going on. Let's look at the income statement real quick. Let's just run through this and just see the revenue growth that they've gone from. 2013, $169.5 billion, and today we're sitting at $387.5 billion. That is absolutely incredible. Net income, back in that time frame, 2013, $37.75 billion, and today they're sitting at $99.63 billion. Of course, they had those big COVID jumps in there. Of course, they had those, and we have to factor that in. So when we start factoring that in, is it possible for them to maintain this for such a long period of time without having COVID, without having stay at home, without selling products to people that may have not bought products because they didn't have anything else to do? Let's look at the shares real quick. I really love to see this. Apple loves taking care of their shareholders, not so much through dividend, but through share buybacks. Now, the argument can be made that they are buying back shares when their company is quite expensive. That is not a good thing, but they do not pay that much of a dividend. Their dividend, and let's go over here to the metrics real quick. Their dividend pays out 0.06%, which is $14.78 billion, which is absolutely incredible. And they can more than accommodate this. $107.58 billion in free cash flow, and the 5-year average is just over $78 billion. So they're very comfortable from that aspect. Now let's see what the analysts have to say here going forward. Okay, let's see. Earnings per share growth is there. I mean, look at the growth that they still see coming out of Apple over the next 4 or 5 years. This is just shocking to me. I mean, even when we look at their revenue. So that was earnings per share. Now look at their revenue. Even revenue growth. A company that is $2.5 trillion. $2.5 trillion is still seeing growth into the future. The question becomes, how much growth is it? Because at $2.5 trillion, where can they go from here? What direction can they go from here? What I think is that this company has not even started scratching the surface on the subscription side. They have Apple TV. They have the Apple Fitness that they haven't even touched yet. I think Peloton would be a great buy for them. So if Tim Cook, if you're watching, go ahead and do that. This is a phenomenal company as far as subscriptions go. And now they're starting to go after hardware subscriptions where you can subscribe to their phone, the actual physical device, and you get a subscription that way. So with that being said, they all already have the great hardware. They already have the great software. Now they're getting into the subscription space. They're not even in the car space yet, which a lot of people have been talking about. Who knows where they can go from here? If you don't know who I am, well, my name is Mo. I am a value investor. I'm also a trader. I also sell options. Anything that has a good process is what I do, and that's what we are all about here at Everything Money. Paul and I are value investors, and the way we look at this is we say, somebody might not look at it. Somebody might say, well, Apple's a $2.5 trillion company. They can probably go to $5 trillion within the next decade. Well, for me, I look at this and say, well, Apple's a $2.5 trillion company. Can they realistically get to $5 trillion over the next decade? What needs to happen as far as their year-over-year revenue growth for that to happen? What products do they need to continue to sell? What software do they need to continue to provide? What subscription services do they need to get to these levels? And that is what I am all about. Now, I keep saying, what would I pay for Apple? Well, let's go over to here to our software and look at Stock Analyzer's tool. So the revenue growth over the past decade has been about 10%. It's been about 9.6%. So going forward, do I think that a $2.5 trillion company can grow at 9.6%? Well, based on what I said about subscriptions, it is possible. Is it probable? I don't necessarily think so, but it is possible. So on the low side, I'm going to come in here and put 4% revenue growth over the next decade for Apple. I think that's a small conservative number that is very attainable, but if it's not attained, I would be okay with it, and I want to see what price I pay if that happens. I'm going to go to 6% on the mid-level and 8% on the high level. Profit margin. Well, their profit margin has always been relatively consistent around that 23 number. So I'm going to put in 23, 23.5, because if they do go to subscription services, they can certainly make bigger margins, and 24. Free cash flow margin is going to be a little bit higher. I'm going to start at 25, 25 and a half, and 26. And you might be saying, but they did 27.8% in the last year. You know, they did, but I'm still kind of worried that this could be some type of anomaly coming out of COVID situation, where they're still getting a little bit of a bonus for that. Now, PE. This is an interesting one because Apple has a very, very loyal customer base. So what I'm going to put in here is 16, 18, and 20. I changed my mind. I'm going to go 15, 17, and 19. And I'm giving them that benefit of that 19 PE, which could be argued to be a little bit high, but let's start with it. The great thing about Stock Analyzer is you start with some numbers and then you move on from there and you play around with them and see what you're going to pay for it. Price to free cash flow, I'm going to put in the exact same thing, 15, 17, and 19. And my return, I'm going to do 12 and a half, 14, and you know what? I'll just go 12 and a half across the board. Very, very safe bet on Apple, I think. And let's see what we spit out here. And truly, this is kind of what I'm looking at. We're looking somewhere in the range of probably $80 to $130. And for me, personally, I'm starting to look in this 120 range. And I'm going to show you how we can do that. I'm going to pull up an options chain right now. So what is this telling me? This is saying that Apple's current price is $155. And I don't want to buy Apple until I get to 120. So we're going to say 120 is our number where I'm comfortable buying Apple. Anything above that, I really don't want to own the shares. So what am I going to do? I'm going to go in the options chain. I'm going to do what is called selling a put, a cash secured put, meaning that I have the money in my account to support the purchase if it happens at 120 or somewhere below. So let's go to this options chain and let's go to November 18th and let's scroll down here to $120. $120, and I'm going to highlight that with my mouse. So what this is saying right here on this option, I'm giving somebody the right, if I write this contract, I am giving somebody the right to take the shares of Apple and put them in my hand. I am going to buy those shares if the stock price is below $120 on November 18th, 2022. You can go to any date you want, but this is a great way to generate income while you're waiting for a stock. If this doesn't happen, let's say that Apple finishes at 130 on November 18th. Shares expire. I keep the premium that I'm about to discuss with you, and you move on from there. It's a great way to generate income, like I said. So as of right now, you're going to collect about $1 per share at that 120 level. So just for writing that contract, you are going to get $1 per share just to give the market the option to put the money into your account, or the shares into your hand, I should say. So this is a great way of generating income. We have multiple videos on options that are way more in depth that you can go and watch. Also, in the Bid and Ask Nation, I do a lot of options. I have many, many hundreds of people that come to me and will ask me questions about it. I have so many different seminars that I've made and just literally sat down with people just like you, beginner, expert, doesn't matter, that are in there learning from me how I generate income. Also, every Thursday at about 10:15 in the morning, I go on and I do a live, options only live stream just for people in the Bid and Ask Nation. So it's a great place to be. Come sign up, try it for a month. You will enjoy it and you will learn how to collect $1 per share just for waiting. Worst case scenario, I guess, this finishes above 120 per share and you still collect the $1 per share. You rewrite the contract, you move on. It's a really, really great way for generating income. Now, another great way to generate income here is with trading. So Apple is one of my favorite stocks to trade because you can trade it from any perspective you want. And right now, Apple is looking to be a really good short from a long-term perspective. This right here is my long-term chart. And what this is my overall trend. So what this is saying is that Apple is in a downtrend right now. Why? Because the red line is under the yellow and we're under that 80% level, which is my sweet spot. Now, you can see Apple has had a very tough time breaking through this level of about, 153. So when we get below that 153 level, when we get another engulfing candlestick, maybe tomorrow, maybe Thursday, maybe Friday, maybe next week, who knows? And we start getting candles like this, that $16+ billion of shorts, those people are going to be very happy because this thing is going to be trending down and it really could realistically come down to this 130 level all over again. Or if you don't want to do that and you want to come over here and day trade it, you absolutely can. You can come over here and see what's happening from a day trading perspective if you like that more rapid pace, if you like that adrenaline rush, but you still like a process. You can see Apple had a wonderful day of trading. And I know that a lot of people in the Bid and Ask made a lot of money on this one today. There was awesome selling volume that happened this morning. Awesome selling volume and really great engulfing candlesticks. What are we looking for? We're looking for our trend to be below that 20% line. As long as we're below that 20% line, we can be making money on the downside. We want selling volume. People are selling. People were worried today. The market was down 4% at one point. It might be down 4% now. Apple was down a significant amount this morning. This is the time to take an advantage of this. And then you're adding on these engulfing candlesticks, wherever they may be. You could have made money all morning on this thing, and it was a great place to be. So I just gave you many, many, many different ways that you could have made money, get entered, sell options on Apple. Guys, if you liked this video, this is not the only component of the puzzle. Go and watch this video of Paul talk about margin of safety. Bad times are coming. They could be today, they could be tomorrow, they could be in 6 months, but you need to know how to handle that situation. Go watch this video. I'll catch you on the flippity flop.